Hello friends, I'm Narendra Verma once again before you. As you know very well, we are dealing with the Chapter 4 in Accountancy Class 12 CBSE syllabus, that is change in profit sharing ratio among existing partners, right? And in today's session, we are going to cover these topics: revaluation of assets and reassessment of liabilities, journal entries related to these, preparation of revaluation account, adjustment entry in case partners want to retain assets and liabilities at previous values, right? So without wasting much time, let's start. So, revaluation of assets and reassessment of liabilities. Let me tell you one thing, that why we do not use the same term at both the places. Means, why we are not saying revaluation of assets and revaluation of liabilities. Why we have put reassessment before the liabilities. There is a reason behind it. What is the reason? That assets can be valued and revalued. Like if we have machinery, okay, then its value in future will decrease. If we have land, its value will increase in future, right? So after adding the increased value, the value will be known as revalued. Understood? So assets can be revalued, but the liabilities can never be revalued. Why? Because, for example, creditors are there. Say for example, there are creditors of 50,000. So we cannot revalue them. Understanding? We can just talk to them. Okay, if they get their payment allowing us some discount, then this is called reassessment. It cannot be revalued, because there is no kind of equipment, right? Equipments can be valued and revalued, but the liabilities means the amount you are supposed to pay. These are the payments, okay? So the payments can be reassessed only, cannot be revalued. Understood the point? That is why always we use revaluation before the assets and reassessment before the liabilities. Understood the point? Fine. Now, let's talk about this concept, why this concept is necessary in this chapter. See, the chapter is change in profit sharing ratio among existing partners, right? When two or more partners who were already sharing their profits and losses in some ratio, on a certain date they decide that they need to change their profit sharing ratio. So at that point of time, they need to revalue the assets and reassess the liabilities of the firm as well. Why? Because all the partners have rights on assets and liabilities in the old ratio, right? Okay, after running the firm for 5 years with the same ratio, now after 5 years when they have taken the decision to change their ratio, then definitely there is a possibility that the value of certain assets may have increased and the value of certain assets may have decreased. Similarly, the value of the liabilities may have increased or decreased. Okay, so there are the possibilities. Okay, so at that point of time, the partners may not feel cheated. That is why it is a fair decision that the increasement and decreasement in the value of assets as well as in the liability, that should be recorded. Okay, and after that, the profit and loss on that complete change means revaluation process, okay, that is assessed, and thereafter it is transferred to partners capital account, whether it is profit or loss. If it is a profit, it will be credited to partners capital account or current account, or if it is a loss, it is debited to partners capital or current account. Understood the point? Okay, so it is necessary to revalue the asset and reassess the liabilities at the time when the partners are willing to change their profit sharing ratio. Understood? Now, it depends on partners. This process they can do in two manners. They have two choices. Fine. What are the choices? I just write down here. So, you can have a look at the time of change of profit sharing ratio in the relation to revaluation of assets and liabilities. Partners may decide. They have two choices, like I told you. One, they may record revised values of the assets and liabilities in the books of the firm. For example, earlier the value of machinery was 5 lakh. right? And when they want to make change in their ratio, then at that time the value of the machinery is 4,80,000. Fine. So what is the meaning of first choice? They are willing to keep machinery at this value, 4,80,000. Okay, but there is a change of 20,000. 20,000 value of machinery has gone down. So that has to be adjusted. That has to be transferred to their capital accounts. How? We'll talk about the process of that. Understood? So the meaning of this is what? They want to keep their assets and liabilities at the revised value in the new balance sheet. Understood? Now, the same one example can be given related to the creditors as well. Okay, like earlier the creditors were 50,000. Okay, and they provided some discount later on. So now, at the time of change in the ratio, the creditors are 49,500. Okay, so they will be recording their creditors at this value, and this 500 will be transferred to their profit and loss account. Understood? There is a change. Okay, so this is the meaning of this decision. Fine. Now let's talk about this decision. What it says, not record revised values of assets and liabilities in the books of the firm. Same example continues here. Earlier the value of the machinery was this, now the value of the machinery is this. But even then the partners want to record the same value of machinery in their books, right? They do not want to record the machinery at the revised value. But in actual, the price has gone down, right? So this 20,000 exists there also. But for that, what they do, they just pass one adjustment entry between each other and the adjustment happens. Okay, they do not want to make records for that. Understood? So how the treatments are going to happen in two of the cases, we'll talk about that. Right now I just made you understand what do they mean. Understood? Okay, so when the partners opt this option, then for the revaluation of assets and reassessment of liabilities, they prepare one temporary account which is known as revaluation account. Okay, one temporary account is prepared. All the increase in the value of assets or decrease in the value of assets are transferred here. Similarly, decrease in the value of liabilities or increase in the value of liabilities are transferred here. Then the profit and loss is calculated, which is known as profit or loss on revaluation of assets and liabilities, and then profit or loss, whatever is the result, is transferred to partners' capital or current account. Understood? In this process it is done. Okay, now let's talk about this. What happens here? Here also the increase and decrease amount is calculated. After that they just calculate net effect. On the basis of net effect, one adjustment entry is passed between or among the partners. Who is sacrificing or who is gaining, we have to calculate, and then only we can pass one adjustment entry. Okay, so this I have explained you in brief. In detail we will be discussing that. We will be noticing, we will be learning how to treat them. We will be doing the numerical problems as well. Alright, so in brief I have told you how the things are going to be tackled. Now let's talk about in detail. So very first, let's start this choice. Fine. So what we are going to learn? We are going to learn in this chapter change in profit sharing ratio. When the partners are willing to change the ratio, at that time assets and liabilities values are changing, and for that the partners have chosen the decision that they want to record revised values of assets and liabilities in the books of the firm. So in that case, we will be preparing revaluation account, how the treatment is going to happen, how the journal entries will be passed, and how these will be posted to this account, what will be the process, what will be the rules. We are going to have discussion about that. Okay, later on we'll come to this. Fine, so let's start. So in this first choice, when partners decide to record revised values of assets and liabilities in the books of the firm, let me tell you one thing related to this. If in the question nothing is mentioned about the choice of the partners, then by default we'll be following only this process. Understood? Okay, for the second option they will specifically mention, but for this they will not be mentioning specifically. They may or they will not. Understood? So by default we have to do the treatment of the question as per this. Okay, so in this what happens, like I told you that one account is prepared which is known as revaluation account. Now let me tell you about this account. This is a nominal account. Sometimes it is also asked in 1 mark question that what is the nature of revaluation account. So the nature of the revaluation account is nominal. Why? Because this is open only for the namesake. Later on it is closed and the balance of this, whether it is profit or loss, is transferred to partner's capital or current account, right? So this is made only for the purpose of recording the increase and decrease in the value and amount of the assets and liabilities. Understood? Now, how the entries are going to be passed, what will be the treatment, I just tell you few rules. Okay, it's not good to learn these things but to understand these things. If you understand the concept behind that, you need not learn these things. So I just discussed that conceptually. Understood? What I wrote, increase in assets is credited. See, what happens, let's understand this from the point of view of the ledger account, because revaluation account is a ledger. Okay, there are 2 aspects, one journal entries and another ledger. In your previous standard you must have learned that the journal entries are passed to ledger in the opposite side. Okay, so consider the treatment what I am going to discuss right now as per the ledger. Understood? So whenever there is any increase in asset, so that is credited to this account. This account means revaluation account. Okay, whenever there is increase in any asset, then this amount is credited to this account. Fine. And decrease in asset is debited to this account. Now I just give you one example. Say for example that we have land of rupees 5 lakh, right? And whenever the partners are going to change their ratio, then at that time the value of the land was 5,50,000. Now what mistakes the students commit? They just take the entire value of 5,50,000 and this amount they just credit to this account. That is wrong. What they'll have to do, they have to pick only the amount of 50,000. And how we reach to this 50,000? 5,50,000 minus 5 lakh. And what we get? 50,000. So this 50,000 will be credited here. Understood? Okay. Similarly, when there is a decrease, say for example we have machinery of 5 lakh. Earlier its value was 5 lakh and now it is 4,80,000. So there is a change of 20,000. So this decrease in the value of machinery is debited to this account. This 20,000 will be debited to this account. Understood? So don't commit this mistake. Okay. Now, with the liabilities, there is the opposite treatment of assets. How? I just show you. Okay. Decrease in liabilities is credited to this account and increase in liability is debited to this account. Let's consider one example. There are the creditors of 50,000 and when the partners are willing to change the ratio, at that time the creditors have agreed that they would allow the discount of 500. Okay, so this 500 is what? Increase or decrease in the liability? That is the decrease in the liability. Okay, so decrease in the liability is credited to this account. Understood? Okay, now let's understand how the liabilities may increase. Say for example, there is the loan of 50 lakh. Okay, and when the partners are going to change the ratio, then interest has been accumulated. Now the loan has become of 52 lakh. So this 2 lakh value has gone increase in the value of liabilities, right? So this increase in liability is debited to this account. Understood? There is one more thing now. Unrecorded assets are credited to this account and unrecorded liabilities are debited to this account. Now let's understand what are these unrecorded assets. Sometimes what happens when the partners decide to change their profit sharing ratio, at that point of time, sometimes the assets come into the notice which have not been recorded in the books, right? So at that point of time, these are treated as of now we need to create these assets. So therefore, these are credited to this account. We are not talking about journal entry right now. When we talk of journal entry, we'll discuss the concept according to that. But as you know that there is the opposite posting of the journal entries to the ledger. Understood? I'll show you as well. Okay. So at that time we consider that we have created the assets. So all of a sudden the amount increased. So the total value of unrecorded asset is just equivalent to entire increasement in the assets. Therefore, it is also credited. Understood? And similarly, the liabilities can also be unrecorded. When they come to know there are certain liabilities which have not been recorded in the books. Okay, so at that point of time they start recording them in the book. Okay, journal entry will be doing separately, but here we're talking about the ledger. So from that point of view, these are debited to this account. Understood? Apart from these, the expenses on reconstitution of the firm will also be debited here. Apart from this, sometimes the expenses are also incurred on the process of reconstitution of the firm. Okay, so if any expense is taking place, okay, whether it has occurred in cash or payment has been made through check, so cash or bank account, okay, will be debited to this account. Understood? So we'll be understanding the journal entries also regarding that. Then thereafter we calculate the result of this account. Okay, so when the total of the credit side is more than the total of the debit side, it means there is the profit on revaluation, and this profit is credited to the partner's capital or current account. Understood? And the opposite, when the total of the debit side is more than the total of the credit side, then there is a loss on revaluation, and this loss is debited to partner's capital or current account. Understood? Now let's very first understand the journal entries related to that. Then we will see the format of revaluation account, and then we'll do the numerical problem of this. Fine? So let's understand the journal entries as well as the format of revaluation account together. These are journal and this is ledger. Understood? Okay. So very first, for increase in the value of asset, I just told you this amount is credited to the revaluation account. But what will be the journal entry? Let's see. See, particular asset account debit to revaluation account. Particular, why? Because the entry will be done by the name of the asset. Say for example, machinery, then machinery account debit to revaluation account. If the stock value is there, then stock account debit to revaluation account. If the land is there, then land account debit to revaluation account. Building is there, then building account debit to revaluation account. If fixed assets total are given, then fixed assets account debit to revaluation account. Understood? Okay, we can also pass the combined entry as well. Say for example that there is the increasement in two assets. One is the stock, another is the machinery. Then what entry will be passed? Machinery account debit, amount will be there. Stock account debit, amount will be there to revaluation account. Understood? So we can pass the compound entry as well. Okay, but there has to be related to the increase in the value of assets only. Understood? Now, this is the journal entry. This will be transferred to this ledger. Fine. So this is to revaluation account. This entry will go in the buy side. So this is here, and this is the credit side. I just told you that from the point of view of ledger, this increase in the value of asset is credited to revaluation account. Understood? But in general, what the entry will be there? Asset account debit to revaluation account, being the increase in the value of asset recorded or transferred to revaluation account. Whatever narration you want to put, you can put. Understood? Now let's move on to another entry. For decrease in the value of asset, just opposite of that, revaluation account debit to asset account. Understood? Okay, now we see that in the two side assets are there. In revaluation account, it will be there in the two side, means debited. This entry is here. Like I told you that decrease in the value of asset is debited to revaluation account. Understood? Here also you can put the narration being the decrease in the value of asset recorded, and here also the compound entry can be passed. As many assets are there with whose value have decreased, the same can be put here, like revaluation account debit to stock account to machinery account to furniture account, whatever is the case. Understood? Now let's move on to another entry. Now for increase in the amount of liabilities. Okay, so what I told you, for increase in the amount of liability, this amount will be debited. Okay, so here as well we can see revaluation account debit to particular liability account. Now see here in revaluation account it will be mentioned in the debit side. So it is given here. This is the debit side, to liabilities, increase in the value. Understood? Now let's understand this. So like I told you, decrease in the amount of liability is credited. Okay, same treatment like this will be done. Particular liability account debit to revaluation. So this will be what? Credited. Okay, so it is given here by particular liabilities. You can see this is the credit side. Fine. Now let's understand the other entry. For recording the unrecorded asset, the same entry will be passed. Unrecorded assets account debit to revaluation. Okay, so in revaluation it will be going in the credit side. So it is given here by unrecorded assets. Understood? Now for liabilities, the opposite entry will be there. Okay, revaluation account debit to unrecorded liabilities. So the entry is given here. Understood? Now let's talk about the expenses on reconstitution of the firm. Okay, actually the treatment related to the expenses on reconstitution of the firm has 3 cases. So we need to understand all these 3 cases. See, let's have discussion about the expenses on reconstitution of the firm. Actually what happens when the reconstitution takes place, then the old partnership deed is discarded and a new deed is formed. And for that some kind of legal formalities, legal fee and stamp duties etc. is supposed to be paid, and maybe possible a person is hired for that particular job, and the whole process includes some cost, right? So these expenses are the expenses of the firm. Okay, so in the absence of any information, these are considered solely the expenses of the firm, and firm is supposed to pay them in cash, right? Okay, so there are 3 cases. I have written here 4, but in actual there are only 3 cases related to the expenses on reconstitution of the firm. Okay, let's understand the first case. When expenses are, will come to this as well. Okay, when expenses are incurred and paid by the firm. So this is by default. In the absence of any information in the question, you will follow only this treatment. Okay, because these are the expenses of the firm. So in that case, no name of the expenditure is given. So we have prepared one account for the same, that is revaluation account, and that is as well the nominal account, and all the losses and expenses are debited. That is what the rule you learned. Okay, so name of the account is revaluation. On that very basis it will be debited. Revaluation account debit to cash or bank account. If it is paid in cash, then cash. If it is paid through check, then bank. Being reconstitution expenses paid. Understood? Now let's move on to another case. When expenses are paid by partner on behalf of the firm, right? Means this is the expense relating to firm, but partner has paid on the behalf of firm. So partner will recover later on from the firm. So what the right now in cash the partner has made payment, but from the account of the firm the partner will get the payment. So what the firm will do, firm will pass the entry right now. Okay, in actual the relationship of partner and the firm is that in cases of the payments to partner, until unless they withdraw the cash or deposit the cash, their capital accounts are debited or credited. Okay, so here the partner has done one obligation on the firm, so definitely the firm will credit its account. Okay, only then its account will increase. Understood? And this is the expense for the firm. That is why revaluation account once again is debited. Revaluation account debit to concerned partner's capital or current account. Maybe possible partner A, partner B, partner C. So his name will be coming here. A's capital account or A's current account. Understood the point? Okay. So here this is the expenditure of firm, like here. So they debited it in the books of the account of the firm, right? Okay. But in cash, nothing has gone from the pocket of the firm. Okay, so what the firm will do? Firm will credit the same amount to the partner's capital account. His capital will increase. Understood? Okay, let me tell you one more thing. This similar treatment is done in case of this as well. When in the question it is given the remuneration is paid to a partner for the same. Because this process has to be done by someone. Sometimes the firm hands over this job to a particular person, to any outsider. But sometimes a partner takes the sole responsibility. He says that whatever amount you are going to pay to that dealer, just pay to me. I will just handle everything. Okay, so firm has nothing to do with that. Okay, they will just treat in the same way like they would have paid to any outsider. They would pay the same amount to the partner. Okay, so the same entry will be passed, revaluation account debit to concerned partner's capital account. So both cases are similar. Now let's talk about the third one. When expenses are to be borne by partner but paid by firm, right? Means now may be possible that there is some overdue of the firm on the partner. Okay, so it is there agreed that the partner will bear. Firm is not going to bear. Now this expense does not relate to firm. It relates to partner only. Okay, so in that case, what the firm is going to do? Firm is going to debit the partner's capital account, right? And the amount has gone from the pocket of the firm. So definitely cash or bank entry will be done, right? Okay, so right now this is not the expense of the firm. If it was the expenses, we would debit the revaluation account, but as it is not the expenses of the firm, so what entry we are going to pass? Concerned partner's capital or current account debit to cash or bank account. Here we do not see revaluation because this is not the expenses related to the firm now. Okay, firm will directly decrease the amount of partner's capital, nothing else, because the amount of cash from the bank or in hand has decreased from the books of the firm. Okay, so here revaluation will not appear. Now last case, which I told you that this case does not exist, but even then I am discussing it. When expenses are to be borne and paid by partner, like partner is supposed to bear and he will only be paying. So now firm has no role to play. So when firm has no role to play, firm has not made any payment, okay, then there is no entry in case of firm. That is why I have not mentioned it like a case. Understood? Okay. Now let's see that how these journal entries are going to be posted to the revaluation account. Let's see this case. Revaluation is debited and to cash. To cash or bank will be mentioned in the debit side. Let's see here. To cash or bank account, expenses of reconstitution. Understood? Now let's understand this entry. Revaluation is debited here as well to concerned partner's capital or current account. So here you can see partner's capital or current account, concerned partner. Okay. Expenses on reconstitution. Understood? Fine. And here there is no revaluation, so no entry will be passed here. Understood the case? Now let's talk about the balance of revaluation account. Right? Like I told you that it can be either profit or loss. So what journal entries will be passed in that case? Let's have a look. So for transfer of profit on revaluation. Okay. So in that case, what is going to happen? See, revaluation account debit to all partners' capital or current account, as the case may be. Why I use to here, you know already very well. In case of fixed capital method, we will be considering current account. In case of fluctuating method, capital account. Understood? Distribution of the profit will be done in old profit sharing ratio. Understood? Okay, you can see this entry here. To partners' capital account, to current account, profit and revaluation transferred. Okay. In case of loss, what entry will be passed? Just opposite to that. All partners' capital or current accounts debit to revaluation account in old profit sharing ratio. You can see that this entry is here posted. Okay. All partners means A, B, C, as many are there, like A's capital account debit, B's capital account debit, C's capital account debit, or current account debit. Understood? So in that way it will be done. You will better understand all these cases, all these journal entries and this posting into the revaluation account when we do one numerical question on this. Understood? So this is all about the theoretical part. Now we are going towards the numerical part. Okay, you can see the question on your screen.